Susan kind of teed me up and talking about the move to privates or the rise of privates as part of the portfolio here. So my first question for the group is, at what level of wealth in your portfolio does it make sense to start moving beyond liquid assets and maybe into some more of these illiquid assets? So I'll kind of throw that out there for the group first, and knowing that in the audience there might be people that have, advise all different levels of clients here. So I'm interested to kind of get each of your perspectives, given the prevalence and exposure now. I don't, 10 years ago, I hardly remember people talking about private companies at the rate we're talking about them now. So we'll start with just level of wealth. Whoever wants to go first. Sorry, I should have teed one of you up.
No, yeah. So I probably historically it would be high level of wealth. If we're talking about like a 10 to 20% position size in your portfolio, and like a ticket size has to be over $1 million. It's a high level of wealth. I think now there are certainly efforts being made to make things a lot more accessible at smaller ticket sizes, which means that the total level of wealth does not necessarily need to be as high. So there are different types of vehicles that are becoming available from different firms, available on different platforms that are kind of making it a bit more accessible. But I don't know if you guys would.
Yeah, I would say I don't know specifically at Vanguard what level of wealth you need, but I mean, definitely high net worth, but probably ultra. I think one of the things there is that the average private equity, for example, performs just like public equity. Like we joke at Vanguard, sometimes we get questions. We want private equity, but we want it to be liquid, and we're like, well, that's called public equity. So I think in the private equity, a lot of the research we've shown is like, unless you're in a top quartile fund, then you're better off in the public markets. And so obviously we're Vanguard, we want to do things. We want high quality managers at low cost. We have some offerings. But also our capacity there is not unlimited, right? So we have to use it smartly, and typically that means, also there's elements of the client, what they're comfortable with in terms of liquidity and so forth. Specifically on our team, we've done a lot of work on how do you build a liquid portfolio around an illiquid asset. So we have those capabilities, and I think that, I know Vanguard has aspirations to do more in the future. But I would say the main thing would be, the capacity.
I have a product for you, which I'm totally serious about. I've never convinced anybody to do this, but take public stocks, put leverage on them, and only mark them like every year.
Yeah.
And don't let people out. Right? It's a really good product. So I'm glad you brought up the performance point, because I think it's exactly right. Now, we, to talk our own book a little bit, like we have 30 people doing fund research. We have a very concentrated platform. So our goal is to be in that top quartile. And I think we've delivered on that. So I think we've justified the role of them. What we've been able to do is create structures to make them accessible to smaller clients. And so then, if you just sort of narrow it down to the qualified purchaser world, the sort of 5 million above, like you can make a $100,000 private equity investment and have it make sense from a liquidity standpoint and be additive. So I think we've brought, hopefully very sophisticated endowment style portfolios available to a much smaller type client.